Let's talk business now with Tyler Orton from Business in Vancouver. Good morning, Tyler.
Good morning, Sonia.
Let's start off with this Richmond airline company, Canada Jetlines, and I think they will finally be taking to the skies. Is that right?
That's what appears to be at this point. The carrier just announced yesterday that it's entering into a reverse takeover on the TSX Venture Exchange. So it's going to be going public, and the company says this will give it enough capital to finally get off the ground after multiple delays. Now, former President David Soloway, he previously told Business in Vancouver newspaper that it would require about $48 million for this budget carrier. No frills really offered on this particular airline. It's going to take $48 million for them to get off the ground going forward. So what happened is there was a previous attempt at a reverse takeover back in 2014. It ended up in a lawsuit, and the company's been delayed ever since. So with this new capital being injected by going public, we also have the persistence of another company, New Leaf, which is trying to be
I was wondering when they were going to be mentioned. We haven't heard about them for a while.
Well, exactly, and that's just it. They postponed their February they postponed their February launch, and so this is delaying them. That means one less competitor in the budget airline market. So this is kind of seen as the opportunity for the Canada Jetlines to succeed in the absence of this other competitor. So that's why they're eager to get started as soon as they can. But they originally planned to launch back in mid-2015. So it's been a little while since they really wanted to get off the ground.
Okay, I want to talk about Canada's economy and commodity prices especially, because apparently, according to a new report out, they could be worse than we thought.
Yeah, this is coming from the OECD. They are just changing their forecast for the Canadian economy going forward in this year and next year, and it's not for the better. And the Paris-based economic think tank says a lot of this has to do with commodity prices not faring as well as previously thought. Now, if we take a look at the numbers, I can show you it's a bit of a gap between their original projections. They originally figured that in 2016, we'd have economic growth of 2% in Canada. They've now downgraded that to 1.4%. 2017 is going to be a better year, but again, they had to downgrade it one tick from 2.3% to 2.2% economic growth. Now, people are wondering, and Steve even mentioned earlier on today how oil prices are up, the Canadian dollar is up. A lot of this has to do, well, pretty much all of it has to do with this new plan just announced by Russia, Saudi Arabia, Qatar, and Venezuela to freeze oil production at January levels. Now, this is contingent on other countries joining in, and earlier today, Iran has been signaling that it would be willing to participate in such a plan. So is this going to be enough to change the projection of the Canadian economy? I'm not so sure, because there's just such an overabundance of oil in the markets right now. People are having trouble actually finding physical storage just for the number of barrels of oil that are out there right now. So it's going to be tough to get prices going downward or going upwards further down the road.
Okay, Tyler, thank you very much. Have a lovely day, and we'll speak to you again really soon. Thank you.
Thank you.
Tyler Orton from Business in Vancouver.